I'm Alicia Hyatt, editor of Mining Markets Magazine, and I'm here at the PDAC with Mickey Fulp, the Mercenary Geologist. Welcome, Mickey.
Thanks a lot, Alicia. It's always my pleasure.
Mickey, how would you describe the mood at the convention this year?
I think it's better than it was last year and the year before, maybe. And a lot of that has to do with the venture index is up probably, let me think, since its low in mid-December, about 885, and we closed on Friday at 1050. So that's probably about a 15% rise. And so that little rebound we've had in the index, really, it's not been a broad-brushed phenomena, but the better companies, the cream always rise to the top, and that's what we're seeing now.
So juniors are still having a lot of problems getting financing. How does this period, that's been the same way for a few years now, how does this period of difficulty compare to previous periods when it's been difficult for them to find money?
Well, this bear market we're only in the beginning of the third year of this bear market, and I've seen bear markets last 5 to 6 years. So if we're actually coming out of this one in 3 years, I would think we're lucky. The ability to finance is better for the better juniors, but this is not a broad-brushed rally at all. The struggling companies, for the most part, are continuing to struggle, and they should continue to struggle until they just dry up and blow away, because we have too many companies in this sector. We don't have that many good projects. But I am encouraged by the fact that there is money for good juniors.
Are you using this period to buy or unload stocks?
Buy, sell, and hold, all three of the above. So I've taken some profits lately on companies that have reached my target values, and what I'm generally doing then, I'm rolling that money into other juniors that I'm interested in. A lot of things are just still on hold right now, and some of those will be used once again for tax loss selling in December. Others hopefully will make a breakthrough. We've just had a recent discovery in one of our holdings, a new copper discovery. So the good juniors are progressing, and we're happy to see that.
Can you name that company?
Avrupa Minerals just made a massive sulfide copper, a polymetallic discovery, copper, lead, zinc, silver, and tin in a pyrite belt of Spain under geological cover with partner Antofagasta Minerals, a mid-tier copper producer.
Mickey, I want to talk a little bit about commodities. You write about the whole rainbow of minerals on your website, mercenarygeologist.com. Which metals do you prefer this year? Do you think will do well?
I'm most bullish right now in the mid to long term on uranium. I remain a copper bull, not specifically in the short term. It's been flat. We very range bound. We don't expect that to change this year, but mid to long term fundamentals of copper are compelling, and tungsten is becoming the flavor of the year, and I found my tungsten project last year, and so we're happily ensconced in the tungsten business too.
And what company is that?
That would be Blackheath Resources on the Venture Exchange, a tungsten explorer developer in 5 past producing mines in Portugal.
I heard in a talk yesterday that from discovery to production for a copper mine, it takes 17 years versus 10 for gold. Considering that a lot of our copper comes from large aging mines, is this going to be a problem in the future?
Well, copper is a problem. That's why I'm so bullish on the mid to long-term fundamentals. We add something on the order of 80 million more people to the planet every year. 25% of people in the world don't have electricity. You need copper to transmit electricity. And yes, the ability to find good, large viable copper deposits, and in 17 years would be a big copper porphyry deposit. We're not finding nearly as much copper as we're using on a yearly basis. So we need to find more big copper deposits, it's increasingly difficult to do that. But the real hope will lie around those aging mines. Brownfield discoveries historically as what have met the copper demand. So we expect that to continue.
So you mentioned you're bullish on tungsten, uranium, and copper. Gold is missing from your list. How do you feel about gold right now?
Gold's different because it's not really used for anything. So we've seen a recent rally in gold. I think that can be attributed to geopolitical situations worldwide. We've had some countries blow up recently. And so there's been a safe haven rush to buying physical gold, and then physical gold market very much supported by China right now. All in all, I would expect gold to be somewhat range bound. Next time Yellen gets up on the Fed and talks about more quantitative tapering, we may see a dip in gold once again, but that just presents a buying opportunity.